Maria Bartiromo sat down with JPMorgan CEO Dimon in an exclusive Fox Business interview to discuss the impact of low oil prices on both businesses and consumers.
What's the impact of the drop in oil that we've seen? How confident are you that the major banks, JPMorgan included, have their energy exposure in check? I recognize this is a small part of the overall business, but energy prices moving lower is a big deal, given that that's where a lot of the capital markets activity was, that's where a lot of the lending was.
Yeah, so, there's an industry where obviously prices have changed. Remember, commodity prices change like this all the time in all different commodities, so you should somewhat be prepared for it. And obviously that needs to be hurt. The credit side, we'll be fine. We're going to lose more money. We had told the world, and I want to be FD compliant, I think we told the world that if oil goes to $30 and stays there for 18 months, it would cause us to increase reserves by something like $500 million. Which is fine. We're still going to help our companies these companies get through it, our clients. It's important that they, by the way, that we're there in good times and bad. You can't be a bank, and the second something goes wrong, you go running. So the beneficiary of lower oil prices, right? So it's bad for Brazil. It's good for India. So it causes different flows in the countries around the world, but it's good for consumers and businesses. So all those who consume energy are paying lower prices. We think, we have JPMorgan Chase Institute, which uses real data, that they are spending 80% of the gas decrease. And they're spending in T&E, maybe big SUVs and houses, but it's very, kind of the benefit is a little bit spread across a lot of things, as opposed to one industry which is being, kind of badly hurt. So, it's good for the American consumer. Gas is at $2 and if you adjust for inflation, it's kind of the same price it was at in 1960, I'm told.
So you see the data of where everybody's spending their money, obviously, and you say that they're saving money at the gas pump and they are going out to dinner, going to hotels. And
that's true across the country. It's true by income levels, and about 80%, I think, is the number that we think they're spending.
And you think credit quality, you say credit quality is okay right now.
Well, that's the other thing. If the average consumer has another $700, $800 in their pocket every year, that's good for consumer credit, too. So, the benefit is, like I said, it's a little bit everywhere as opposed to, a very narrow slice that's being hurt or helped.
Where are you in your cost-cutting efforts? I guess the last time you had your investor day, you talked a fair amount about your cost-cutting plan in retail as well as in the investment bank. Since then, a lot of your competitors have really taken the axe to capital markets businesses. Are you almost done cutting?
Yeah, we never actually do what I call cost cutting. I mean, we're always adjusting, trimming our sails, and trying to, I call it waste cutting. Get rid of the things you don't need, get rid of them all the time. We would never stop doing the things we need, technology, marketing, people in certain countries and areas. So what we showed the world, our costs would be coming down, and we're meeting pretty much meeting or exceeding what we told the world we'd do. But we'll always be investing in the future. If we find opportunities to invest again, we're going to do that too.
Have you seen the...
And I always make a joke that a lot of companies announce these plans, their expenses never come down. Our total expenses are actually coming down a little bit this year.
Right, and so a lot of people feel like you're seeing the benefits of these efforts certainly over the last couple of years, or since the financial crisis, let's call it that. So are you sort of almost done? But I see you're saying it's an ongoing thing.
It's an ongoing thing, yeah.
Yeah. Today, Goldman Sachs, I guess, is out with a report on the banks downgrading JPMorgan partly because of that reason, basically saying, look, the low-hanging fruit has been picked and valuation is the issue.
Right.
Any reaction to that?
Goldman Sachs. No, listen, I saw that. He said they accomplished, and you've had the benefit we said they're going to do, and I think they think we're quite a good company. So
the best.
Look, the analysts have their opinions, and some want to buy and some want to sell, and that's what makes a market.